Ladies and gentlemen, good day and welcome to the Q2 FY22 earnings conference call of Indigo Paints hosted by ICICI Securities. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manoj Menon from ICICI Securities. Please go ahead.
Hi everyone. It's an absolute pleasure at ICICI Securities, to host the 2Q FY22 results conference call of Indigo Paints. I would just hand over the call to Srihari, DGM Finance and Investor Relations, for further proceedings. Srihari, over to you.
Yeah, thanks, Manoj. Good evening, everyone. Thanks for joining the earnings call of Indigo Paints today. With us today from the management side, we have Mr. Hemant Jalan, the Chairman and Managing Director of the company, Mr. Suresh Babu, the Chief Operating Officer, Mr. Chetan Humane, the Chief Financial Officer, and myself, I'm Srihari, I'm heading Investor Relations here. We have uploaded the presentation for the company for the quarter and half year ended September 30th. As usual, we'll proceed the call with the opening remarks from Mr. Jalan about the performance of the company, following which we'll open the floor for the question and answers. Over to you, sir.
Thanks, Srihari. Thanks, Manoj. Thanks all of you for joining in on the earnings call of Indigo Paints for Q2 FY22. Sincerely hope that you and your family members are all double vaccinated and safe and probably getting back into a physical mode of working from the earlier virtual mode for the last 1.5 years. Now the last quarter has seen a gradual easing of COVID lockdowns throughout the country, which has resulted in a natural uptick in sales volumes. Unfortunately, in this second wave, Kerala has witnessed the highest COVID caseload, and that state contributes to almost 30% of our top line. So sales in Kerala remained subdued until the month of July. It is from early August that the opening of restrictions happened in Kerala, and there was a very, very sharp rebound in Kerala sales during the months of August and September. Now, you're all aware that we have witnessed a very delayed monsoon withdrawal in India this year, and painting activities are adversely impacted whenever there are rains. In fact, the month of September this year has witnessed one of the highest ever rainfalls in India over the last 50 years. Had it not been for these adverse factors of COVID lockdowns in Kerala in the month of July, and the late monsoon withdrawal, I think our top line growth of Q2 would have been much higher. On another front, I would like to inform you that the construction of our new water-based paint plant in Tamil Nadu is progressing extremely well and on schedule. Civil construction is going on and the machinery procurement is also in full swing. And we retain the comment that we had made in the last quarter earnings call that we hope to commission this plant sometime in Q2 of the next financial year. Now we feel that Indigo is still a young company in the paint sector relatively, and it has to play a long-term growth story by continuously increasing its advertising presence and improving its brand equity. So therefore, we have continued to advertise aggressively on television channels all across the country in Q2, including all the IPL matches, gaining high visibility. Now this is going to continue in the remaining quarters of this fiscal year. Now the financials for Q2 of FY22 have already been uploaded on the stock exchange portals, along with a presentation for analysts, and some of you may have had an opportunity to peruse them. Compared to Q2 of last fiscal, our Q2 of the current fiscal shows a sales growth of 26.65%. But what is more relevant in COVID times is to look at the 2-year growth, and that is the Q2 of this year compared to Q2 of FY20. And there we see an increase in top line of 52.37%, which I think is perhaps the highest in the paint industry. Gross margins had started slipping starting from Q4 of FY21 due to spiraling raw material inflation in the prices. It went down a little further in Q1 of this fiscal, and it has understandably contracted further in Q2, although maybe not to the extent that other companies have reported, the ones that have reported their quarterly results. And we have still ended Q2 with a gross margin of 41.72%, which perhaps I think would be the best in the industry. So we have effected a series of price increases over the last 10 months. Unfortunately, they have not kept pace with the increase in the raw material price escalation. So because of this, and partly also because of increased advertising and promotion spends, our EBITDA has contracted by 19.61% in Q2 compared to the Q2 of last fiscal, and the profit before tax has contracted by a similar number, about 19.73% during the same period. Now these numbers are obviously not good, but perhaps better than what the rest of the industry is experiencing, mainly because of our proactive steps in effecting price increases a little more than what the average of the industry has been. You will notice that the PAT numbers for this quarter have contracted by more than 19.6%, in fact by 27.95% in Q2 compared to Q2 of last fiscal. But that is entirely because of some deferred tax adjustments that were availed by us in Q2 of last year. And therefore, our net tax outflow in Q2 of last year was significantly less because of some deferred tax adjustments. If we look at the first half of this fiscal, the top line growth has been 35.74% higher than the first half of the last fiscal. Once again, to make meaningful conclusions, you need to look at the 2-year growth in the first half sales. And therefore, if we compare the first half top line of this fiscal with the first half of FY20, our expansion in top line has been 29.16%. Once again, perhaps the highest in the paint industry. EBITDA in H1 of this year has contracted by 9.47 compared to H1 of last year, marginally due to gross margin contraction and more majorly due to a 100% increase in advertising spends in H1 of this year compared to H1 of last year. PBT contraction in H1 has been much less by 3.36% compared to H1 of last fiscal, and the contraction in profit after tax has been a little higher at 7.52%, once again for the same reason, because of deferred tax adjustments availed in H1 of last year. Now you have heard other paint majors commenting extensively on the raw material price inflation, which has been huge in the recent months. And frankly, it is very difficult for any of us to predict the future trajectory of raw material pricing. Some of the raw materials like titanium dioxide and plastic materials have witnessed a global escalation in prices, which have been partly responsible for the raw material inflation that we are seeing. A lot of it is also can be attributed to the global shipping crisis that the world is facing. Freight rates across international borders have shot up drastically, For some locations, they have gone up by a factor of 10. And there is a huge container shortage, and there is a complete disruption in the supply chain where shipping schedules have gone totally haywire. Now, all paint companies have announced a major price increase from 12th of November, just a week after Diwali, and we have also made a similar announcement to overcome this skyrocketing inflation in raw material prices. And raw material prices hold at the present elevated levels and do not go up further, then definitely gross margins will start climbing back sharply in Q3. And if raw material prices hold at these levels, then it will be Q4 when I think we would start seeing the gross margin figures coming back to the figures that they were or close to that a year ago. Now, in our presentation that we have uploaded, we have, as always, given details of volume and value growth in 4 broad subcategories of our products, consistent with the disclosures that we have made in the past, because we believe that reporting an overall volume growth does not give any meaningful insight in this sector. Naturally, because we have had several rounds of price increases, it's not surprising that for each segment, the value growth is more than the volume growth in each category, and that gap is likely to get accentuated in the future quarters because of the steep price hikes that the industry is taking. What is heartening to note in that chart is that our volume growths have been highest in the emulsion category and the primer category, and it is these 2 categories which comprise of the largest share of the overall value of paint sales. And within the emulsion category, we have seen a much higher volume growth rate on the premium end of the emulsion category, which is very good as far as the future trends are concerned. And I think it reflects the increasing brand equity of Indigo Paints in the industry, because to crack growth in the premium end of the emulsions is the most difficult for a relatively new player. Now, as we have said in the past, the main engine for growth for our company over the next few years will have to be led by an accelerated expansion in our dealer network and a large increase in our tinting machine population. Now, COVID restrictions on travel and dealer engagement have made both of these jobs a little difficult in the first half. Despite that, our count of active dealers is almost touching 15,000 as on 30th September, and our tinting machine population has risen sharply to almost touch 6,500. Fortunately, we have not faced any significant disruption in our tinting machine supply so far due to the so-called global chip shortage. We hope to increase our active dealer count to 17,000 by the end of the fiscal, and we will continue to aggressively populate tinting machines across our network. Now, we do expect to continuously increase our advertising spends each fiscal over the previous fiscal. But this year, because of this huge increase in raw material pricing, we have to make these increases in a somewhat calibrated manner so that our profitability is not adversely affected. We are planning to shoot a new set of TV commercials towards the end of next month when Mr. MS Dhoni returns from his World Cup mentorship from Dubai, and these new commercials will attempt to position our brand in a very unique way within the industry. We have, over the last couple of months, also launched some very innovative measures to gain market share, specifically in the emulsion and the primer categories from the larger players, because those are the bread and butter of the paint business. and they account for bulk of the industry sales value. Now that COVID seems to be more or less behind us, a lot of differentiated products that we have been working on over the last few months, we will start launching them one by one over the next few months, with at least one very differentiated product being launched in November itself. So that is all that I had to say. Most of the figures and the analysis are there in the presentations for you to peruse, and I'd be happy to take questions from any of you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Manoj Menon. Please go ahead.
Oh, hi team. Just a few bookkeeping stroke clarificatory questions. One, if you could tell us about the Kerala contribution and rest of India.
See, as of the last fiscal, we had reported publicly that Kerala had contributed to almost 30% of the top line. We don't like to disclose these numbers on a quarter-on-quarter basis. At the end of the year, we will again report to you as to what the Kerala numbers have been. Naturally, because we have a fairly dominant position in Kerala, our overall growth numbers in Kerala cannot be expected to be as high as the rest of the country, where our status is a little more nascent. However, for the months of August and September, I would say that we were surprised to see that Kerala clocked in growth numbers which were more than the company average. And that is very unusual and very heartwarming to see that happening.
Understood. Sir, actually, the reason or the objective of asking this question was on two fronts. One, short term, to understand whether the 26% year-on-year growth, 52% 2-year CAGR which you had, is that in some way, let's say, but for Kerala, being, let's say, July impact, etc., is there in some way to say that on a like-for-like basis it had been better? Second, also to understand the non-Kerala contribution from a trajectory point of view, to kind of qualitatively have a view, on your, efforts versus output outside of Kerala. That is the context of asking that question.
I said in my opening statement that had it not been for the lockdowns in Kerala from May till July, definitely the top line would have been much higher, because we are a little disproportionately exposed to that state, and you're all aware of what kind of COVID caseloads were prevailing in Kerala. So had it not been for that, definitely our top line would have been significantly higher. Despite that, Kerala has done well and is recovering very fast from those lockdown days. Naturally, the rest of the country grows at a slightly faster pace than Kerala, because in many of those states we have a long way to go in reaching a dominant position. So you would expect naturally that those states would grow at significantly higher percentage. Now, beyond that, to give state-wise granular information on growths may be a little difficult, Manoj.
Sure. Fully understand. Steve, would you want to announce star one? Because I got a few more questions. If there are no further questions, I'll actually come back and ask.
Sure. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sir. Thanks for the opportunity. I had 3 questions. Essentially, let me start with the clarification first. You highlighted that after this price increase, gross margin will move back in 4Q to last year levels. You meant 4Q FY21 levels? Is that understanding correct?
If raw material, see the price.
If raw material, correct. Yes, sorry. Correct. Sorry.
Let me answer each question as you ask them. Otherwise, sometimes I lose track of what your first question was.
Yeah.
So the price hikes that have been announced by the whole industry, effective almost on the same date, 12th of November, amount to a weighted average of about 8 to 9%, depending upon the product mix of each company. But roughly they are of that order of magnitude. Now, straight away it means that your gross margins go up by around 8 to 9% from that day onwards, assuming that nothing adverse happens on the raw material consumption side. So if gross margins do go up by 8 or 9%, of course the full impact of that would not be seen in Q3, because these price hikes would happen when half of Q3 is already over. Therefore, in Q4, when the full impact of this is felt, I think that the gross margins would come back to, at least in our case, to that 48 to 50% levels that we enjoyed earlier. But that is with a major caveat that is assuming that the raw material prices remain where they are today, which are at a very elevated levels. Now, the good thing is that from November, December last year, when the prices started going up of raw materials, it was primarily led by emulsions and the monomers of the emulsions, which of course affect the emulsion prices. So those were the items that were really skyrocketing during that phase. From around July or so of this year, that has more or less stabilized. Of course, at an elevated level, but they are not going up any further in the last few months. So those have been steady, but now we are seeing a whole lot of other products which had not shown a price hike to that extent from November last year till June, July. Those have started skyrocketing. So it's a different basket of goods where we are experiencing this raw material price hike at the moment. How they will behave in the future will partly depend on how long it takes for global shipping schedules to come back to normalcy. And I have no clue on that.
No, fair enough, sir. I got the point. I am very clear on this now. Sir, just on that related point, I mean, as it's at 8 to 9%, while the demand, clearly your growth has been very, very healthy. I wanted to get your thoughts on how do you see, is there a possible impact on volume growth that you envisage, or how do you see the customer accepting it? Would be great to hear your thoughts on.
We just have to keep our fingers crossed and watch. But past experience is that increase in pricing, as long as it happens across the industry, has so far not led to any change in consumer buying habit for paints. Now, this is very different when you get to consumer staples, items of everyday purchase, where a significant inflation does significantly change consumer behavior, because those are everyday purchase items and they affect a household budget. Paints being purchased typically once in 4 years, the sensitivity to pricing on paints is much less. Also, when you take into account that paint accounts for less than 50% of your painting cost, the other 55, 60, 65%, whatever being the labor cost. Therefore, when you look at the overall painting cost, even if paint prices go up by 8 or 9%, the overall impact on your painting cost is less than 4%. Past experience has been that it has not changed consumer buying habits. What will happen in the future month is something hard to predict, but I would be surprised if there is any significant impact on the purchasing behavior as far as the volume offtakes are concerned.
Perfect, sir. Very, very clear. Just the last bit, sir. Is there any update on the new entrant? And if you could kind of share some industry feedback on how, for example, JSW's customer response has been, and if it is possible to read through from that. That's all.
I would not like to comment on any specific company. It is better that you ask the specific company as to how it is doing. At JSW Paints in particular that you ask, not being a listed entity, so accurate information in the public domain is not available. But I will make a more generic comment about any new entrant. It may be the company that you mentioned, or it may be other companies that are planning to enter in the future. We have always believed that all these companies, especially if they have a pedigreed background and deep pockets, as many of these companies do have, will find their space in the paint sector. But you cannot expect any company, no matter how strong it is, to do it overnight. And that is because of certain entry barriers which can only be surmounted with time. Money power can accelerate it marginally, but not in a very significant way. The time taken to build a distribution network where paint companies sell directly to the retailer with no kind of wholesaler in between, to build a network of 20 to 30,000 dealers takes an awful lot of time, because more than half of these dealers are in very, very small towns and rural areas. So it's not easy to do it overnight, to extend your reach to, let's say, 7,000 small towns in India. The other thing happens with brand equity. Building brand equity, no matter how much you spend on advertising, it will take time, because we have to remember and respect that the 4 large established players in the market who have existed all for more than 75 years have spent so much in building their brands over the last 50, 60 years that, even if you were to outspend them for 1 or 2 years, I don't think you'll reach that same level of brand equity. And the third biggest problem is on tinting machines. You have a problem of space at the dealer counter. All dealer counters are reasonably saturated with more than 2 tinting machines in most cases, and they don't have the space to install a new tinting machine. So because of all these problems, of course, we are also battling with those same problems, and it has taken 21 years for us to reach a dealer network of about 14,000 or 15,000, and to reach 6,500 of tinting machines. So there are no shortcuts available in this sector. Time is going to be required, and in due course, any company will find its own space in this sector. The sector is large enough and it is growing. So there is not much concern about new entrants. They will all find their place in due course of time.
No, perfect. Actually, it was regarding the new entrant who has not yet come in. But yes, I got a fairly clear response. Thanks a lot, sir, and wish you a lot. And happy Diwali.
Thank you. The next question is from the line of Jay Kumar Doshi from Kotak. Please go ahead.
Hi, good evening, Mr. Jalan. I have one question. So it clearly seems that over the past 2 or 3 quarters, Kerala has dragged down the growth for the company. So, in a situation like this, what do you do to sort of try to push up the growth in other parts of the country to be, to try and meet the aspirations that you may have set in assuming a certain growth from Kerala? And if you have made any progress on that front, if you could talk about, some success or, accelerated growth in any states that you can call out.
See, Jay, if there is something special that we can do to accelerate the growth in other states, we would do that in any case, irrespective of how Kerala is doing. We don't have to wait for Kerala, for some catastrophe to befall Kerala to start focusing more on the other states. So that focus is there in any case. Now, unfortunately, because of high COVID, which no one can control, and obviously the government, any government facing those kinds of COVID cases would have to put a lot of restrictions within the state. So those are matters beyond the control. So, if we have a few months where Kerala registers almost zero growth or very, very low single-digit growth, because of its contribution in the overall pie, If the other states have grown by, let's say, 45-50%, the whole average for the company comes down to 30%. It's very simple arithmetic. Now, when Kerala starts growing well, it has a disproportionate effect on a company like us. I don't think there is any other company for which Kerala contributes 30% of their turnover. Of course, there are companies that have a slightly higher market share than us in Kerala, but as a percentage of their overall turnover, nobody else is so disproportionately exposed to Kerala. So when Kerala does well for us, as it has done in the last 2 months, and I sincerely hope that it continues in the months to come, then the effect that it has on our top line is also disproportionate. So I sincerely hope that the numbers that will come out in Q3 and Q4, assuming that COVID remains behind us, will be the gap between us and the other players in the industry would be probably much wider than what it appears to be now. I mean, that is our hope and expectation. Time will tell as to what really happens.
Right. And second is, do you feel that for a few products you've taken price increases ahead of the industry? So has it affected growth? Is there any way that you can measure the impact of growth because of price increase that you have taken?
So basically, when the industry does not increase prices, the places where we can increase prices unilaterally are some of our differentiated products where we don't have any industry benchmarks. There are other segments where I won't call them differentiated products, but amongst the larger players, we are the only ones existing in that sector, cement paint being one example, and there are a few other products like that, where we can afford to take a unilateral increase without bothering about what the rest of the industry does. But all of them put together will only be a portion of our overall basket. When it comes to the slightly more undifferentiated products, we pretty much have to follow the industry norms. So it's not that we can increase prices when companies much larger than us are holding on to the same price level. So even for some of the differentiated products, like let me give you an example. We have a differentiated product in enamel called the PU enamel, which sells typically about 25 rupees a liter higher than all the other companies. But that gap of 25 rupees, we cannot unilaterally make that gap to 40 rupees or 50 rupees. Otherwise, our sales will suffer. So we can tweak it by a few rupees here and there, but overall we have to maintain that band of price supremacy, so to speak, that we have over the other non-differentiated products in that same overall category. So to some extent, or to a large extent, we are limited by what the industry leaders decide to do as far as pricing is concerned.
Understood. And the gap between volume and value for emulsions, is that entirely pricing, or you're seeing higher improved product mix also within emulsion?
No, definitely. And I mentioned that we have seen a disproportionate growth in the premium end of the emulsions. That gap that you see between value and volume, which is 16 percentage points, obviously the price hike has not been 16%. So a part of it would be price hikes. My guess is, off the top of my head, maybe that accounts for 7% out of this. The rest of it is because of the change in the product mix that, the growth in the premium end has been much, much higher than the economy range as far as we are concerned. And that has contributed to a much higher value growth in the overall emulsion sector. I sincerely hope that that trend continues. That's all I can say.
Thank you. And finally, can you provide some color or comment on how the current quarter is overall shaping? Any change in the growth trajectory that you may have seen in October?
We have not even ended the first month of the next quarter. Overall, news that we are getting is that the kind of sales that you see pre-Diwali, the markets are not as great as what they used to be. One reason could be that for most parts of India, you continue to have rain till around the 15th of October. Now that is very unusual. Now when that happens, it shortens the Diwali buying period as far as northern India is concerned. Southern India and parts of eastern India, the sales are anyway not linked to Diwali, and we have not seen any change as far as the growth numbers that we expect as far as that is concerned. However, as I said, October also is not over. Diwali sales are not over. We are at the moment sitting on the peak period of offtake pre-Diwali. The announcement of price increases has helped really shore up sales in the last couple of days and will probably continue today, tomorrow, and I think all depots in the Diwali region, the Hindi-speaking belt, will be open even on 31st, which is a Sunday, to do sales, which is pretty normal during Diwali. So maybe a little premature to talk about how Q3 is faring. Overall, along expected lines. So far, no impact as far as offtake is concerned. Growth numbers are good. When you talk of it from an Indigo standpoint, we always shoot for such high growth rates that I can hardly remember a single month when we have not been disappointed in the last 4 years. Always our expectations are a little higher than what we actually deliver. But at the end of the day, when we look at the growth that we have achieved, they're pretty decent.
Thank you so much, and wish you a very happy Diwali in advance.
Thanks. Same to you, Jay.
Thank you. Before we take the next question, a reminder to the participants. Anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Just one question. So you said demand-wise, no significant impact you see. At the lower end specifically, because that's a bit more price-focused segment, do you see delay happening? Because unlike, say, consumer staples, which is day-to-day demand, wherein you would ultimately need to buy, you might cut consumption. Paint can be delayed, right? So lower end, do you see that getting postponed?
No, I don't think so. I don't think we have seen any such trend at all that in the lower end segment there is any postponement of painting activities. So far, we have not seen any such trend like that. And I would be surprised if that kind of a behavior happens either in the lower end or in the higher end.
This competitor saying all paints at one price, we have seen significant scale up in terms of his advertising also. Plus he has gone to new areas. You did answer this from a competitive point of view. My question is from a consumption point of view, one price, all paints, more advertising. What is your take on that?
No, I don't think that they say all paints one price. They say all shades one price. So, normally shades are tinted in tinting machines, and there is a marginal difference between one shade and another because of the cost of the colorant and the quantity of the colorant. So those are fairly cosmetic in our viewpoint. And a competitor has chosen to take a particular stance as a marketing positioning. That is their choice. That I should be commenting on the views of any company. Nor is it fair for me to talk on their advertising budgets or their advertising strategy. I think it is for each company to decide what is suitable for them, and I would have no comments to make on a competitor on this issue.
Sure, that's helpful. That's all from me. Thank you.
Thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Hemant Shah from Asian Market Securities. Please go ahead.
Good evening, sir. Thank you for the opportunity. Sir, do we plan to increase the number of depots in tandem with the target increase in the number of dealers and tinting machines?
See, I think that the two are slightly separate and very distinct in our viewpoint. If the number of dealers go up, it is not necessary that we increase the number of depots. Number of depots are increased whenever we feel that to service a particular part of the state from the existing number of depots, the transportation or the logistics are getting cumbersome. Now, take for example a state like Chhattisgarh, where I think that our market share, vis-a-vis all other states is probably the highest, probably even higher than our market share in Kerala. Now, many of the competitors who have sales lower than us have chosen to have 3 depots or 2 depots or 4 depots in Chhattisgarh. We have managed to service that state very effectively with 1 depot in Raipur, and we don't see a problem there. A state like Jharkhand also, we have only 1 depot. Now, sometimes when we start facing a problem that in one part of the state with the growth in the dealers, we are not able to service it and provide the same kind of service levels, that is what sort of pushes us into opening a new depot. Like very recently, although in the last quarter our number of depots has been stagnant, we have opened 1 new depot in Hubli, in the northern part of Karnataka. I think it started on the 10th of October, if I'm not mistaken. So it is in this quarter. Now, from our existing depot at Bangalore, as our network expansion was happening a lot in North Karnataka, we were finding that the logistics from Bangalore to the northern part of the state, whether it is Gulbarga, whether it is Hubli and, other regions out there in the northern Karnataka, the time taken to deliver the material was getting significantly large. So we have opened a new depot in Hubli. So I don't think that number of dealer increase definitely necessitates an increase in the number of depots. I think the two have to be viewed with a very different lens. And we do not believe in having an unnecessary number of depots when the dealers can be adequately serviced from a lesser number of depots. It's more a question of logistics and the way the transportation network in that state exists.
Thank you, sir. That's very helpful. One last question. Do we have any specific geographies or states in mind to reach the targeted number of active dealers?
No, in every state, we need to increase our dealer network. We need to do it much more in states that we have entered more recently. Like Jammu and Kashmir area, we entered less than a year ago. Punjab, Himachal, and many other parts of northern India, we have entered only in the last 2 years or 3 years. So definitely the speed of dealer increase has to be much more in those states. It will be a little slower in states where we have been around for 15 to 20 years. But even in states where we have a very high market share, like let us say Kerala or Chhattisgarh, we still need to continue to increase our dealer network. Now, in some states, we find that when it comes to tier 3 and tier 4 towns, we have almost reached a saturation. But we still need to increase drastically when it comes to the bigger cities. Now, in the last 1 year, coming back to my example of Chhattisgarh, I remember 12 or 18 months ago, we may have had only 5 or 10 dealers in the city of Raipur. Today, we probably have 75 dealers in the city of Raipur. So, there is a lot of work to be done in the bigger cities, in the states where our presence has been there for a long time. And states where we have entered more recently, we need to expand across the genre of cities, whether it is small town or big cities. So, you ask the question, which are our target states to increase the network? The answer is all 28 states of India.
Thank you. Thank you for answering my questions. I wish you a very happy Diwali.
Thank you, Hemant.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Miraj Shah from Dalal & Broacha. Please go ahead.
Hi, good evening, sir. I just have a couple of questions. Could you tell us how much inflation in raw materials have you faced in the current financial year, and how much of it have you passed on?
The voice is a little muffled. Can you please repeat the question?
Is it better now, sir? Am I clear now?
Yes, please.
Yeah, my question was regarding RM cost inflation, raw mat. Could you tell us how much inflation have we faced in the current year, and how much of it have we passed on?
See, it's a little difficult to answer that with exact quantitative numbers, because the raw material inflation, it happens differentially across different raw materials, and their consumption patterns are different. The product mix that you sell also varies from month to month, and definitely varies from quarter to quarter. So the raw material inflation that you see for the same pricing in Q1 could be different on a weighted average than Q2. But very broadly, if you see, you want to look at it from Q4 to now, or you want to look at it from the last 12 months? Where do you want me to point at?
Since Q4, since 1st April.
So if you look at Q4, from Q4, our gross margins would have contracted by, just a second.
Yep. Gross margins 46.66 in Q4.
So in Q4, the gross margin was 46.66, and in the last quarter, it has been 41.3. So let us say gross margins have contracted by approximately 5 percentage points. The kind of price increases that have happened during this period would be around 6-7 percentage points. So therefore, the cost of raw materials would have increased by, on average, on a weighted average, by around 12%, thereabouts. But these are crude numbers, give or take a few percentage points here and there.
Understood. And sir, in the presentation we've given that we'll be taking more price increases from 12th November onwards. So could you just give us a brief of what kind of price increases should we expect?
Yeah, that has been announced by everyone, and I just said in response to an earlier question that on a weighted average basis for our mix of products, we estimate that the weighted average increase is somewhere in the region of 8-8.5%. It could be slightly different for different companies depending upon the product mix.
Understood. And so my final question that is the product categories that we have, the breakup that we've given: cement, paints, emulsions, enamels, and primers. Could you just give a brief of what kind of contribution did we have from these 4 categories in this current quarter?
If you look at the presentation that we made at the end of the financial year, we gave exactly that. If you go back to the presentation that we made in May, when we were reporting the full year fiscals data, we had given you the contributions last year for each of these categories of products on our overall sale. We will again give it at the end of this fiscal. The reason we don't give it on a quarter by quarter basis is because the relative share of these products from one quarter to another quarter changes very drastically. Now, if you look at some of our differentiated products like floor coat emulsion or tile coat emulsion or some of our exterior emulsions, all of those products have a disproportionate share of sale in the second half when the monsoon is behind us. Those are typically products that are not used very much in the first half, at least after May when the monsoon is upon us, because it doesn't make sense to do that. So I have that slide for the full year. For last year, that segment of cement, paint and putty contributed 15.3% of our total top line in value terms. The emulsion category contributed almost 43% of our top line. The enamel and wood coating segment contributed about 18% of our top line, and the primer, distemper and other miscellaneous products collectively contributed almost 24% of the top line. So as I said, the emulsion segment and the primer distemper segment collectively account for about 66% of the top line, and therefore those are the bulk as far as the value drivers of a company are concerned, not just for us but probably for any company in the paint sector. Now, having said that, these relative contributions are likely to change from year to year and definitely fluctuate wildly from one quarter to another. But these numbers, you can access them. They were publicly uploaded on the stock exchange portals. in May when we were declaring our annual results.
Right. So just one more point in that, if I'm not wrong in understanding, you said that emulsions see a better sales in the second half of the year. You're talking in financial year, right? From now on, you'll see a better.
I'm talking about financial year, not calendar year.
Right. So, sir, but yet we've seen a good volume growth in this current quarter for emulsion. So, any particular reason for that?
No, this is being compared to the same period of last year.
Okay. Right.
You know, monsoon period are a bad time of emulsions, whether it was last fiscal or the year before last or this fiscal. So when you are comparing quarter with the same quarter of last year, and we have seen a good growth there. But overall, the share of the emulsion pie in the first half is much, much less than the second half. In fact, on an overall basis also, about 65% of our sales comes in the second half in terms of value terms. For emulsions, probably that ratio is even higher.
Understood. Okay, yeah. That's it from my side, sir. Thank you so much.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi. Thanks for the opportunity, sir. So just one question. Apparently, Leader has expanded its distribution network, dealer network, exponentially in last 18 months. First of all, are you seeing that kind of competitive intensity in recruiting dealership for your network as well?
From what I read in the papers, they are talking about not just primary dealers, but dealers not directly serviced by them. So what share of that number is primary dealers and what are the secondary dealers is numbers that I do not know. And I cannot comment on a competitor, least of all on a market leader. There is increased aggression on the part of the market leader to gain market share. Whether it is reflected in an increased dealer count, I'm not so sure. When they're quoting numbers, I'm sure those numbers are accurate. But have we observed any increased intensity in their dealer network in the areas where we are there? I don't think I've got such a report from our sales force. But maybe there are areas where their network was, weak by their standards and they have done that expansion. That is for them to decide, and I really can't comment on that. But when it comes to pricing, etc., and discounting, definitely we have seen a lot more aggression by the market leaders on an overall basis.
Sure. So the second question was pertaining to that only. You always call out the BTL activities and intensity separately. And we picked up from our channel checks that even rebates are very aggressive off late in last 6 months. So at one level, we are taking price increases. Are you seeing rebates also being cut down to dealers to manage the inflation?
Well, naturally, when anybody is under price pressure, the first thing that you do is start, moderating your rebates. And when the pricing gets comfortable, then the rebates start moving in a northward direction. So that is common, and those fluctuations will happen. Now, with this price hike that will happen on 12th November across the industry, in case raw material prices do not go up further, in case, and we have no idea to predict that, if that were to be, I think again the discounting will move a little upwards, and you would expect that to happen. And if raw material prices also escalate sharply, then maybe it would not happen. So that is something that you have to really play by the year, almost on a fortnightly basis, and see what your margins are and see what the competitive activity is. But we as a company always have believed that, although we do seek aggressive top-line growth, I think it has to be balanced with profitability. And we don't think that we can totally disregard profitability while achieving top-line growth. So I think you have to strike some kind of a balance between the two, and that has been our philosophy and will remain our philosophy in the days to come.
That's all from my side. This was very helpful. Thanks and all the best.
Thank you. As there are no further questions, I now hand the conference over to the management for their closing comments. Over to you, sir.
No, thanks everyone for giving us a patient hearing. Nothing more to say except to wish you all a very, very happy Diwali and hope that this Diwali brings good cheer to the paint industry too. And I sincerely hope that the raw material escalation will come to a halt sooner or later, and we'll all come back with much better numbers in Q3, at least as far as the bottom line is concerned. The top line has not been of much concern in any case. And when we look at Q3, both this year and Q3 of last year were not affected by COVID. So probably the need to look at 2-year growths will stop from Q3 onwards, assuming that there is no fresh COVID wave in India. And therefore, we can get back to a more simplistic analysis of looking at year-on-year growth on all parameters of Q3 of this year versus Q3 of next year. So once again, wish you all a very happy Diwali, and back to you, Manoj.
Thank you so much, and wish everyone happy Diwali and season's greetings. And looking forward to be in touch. Thank you. Thanks, guys.
Thanks. Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.